Want to build real wealth through real estate? It's not just about cash flow and appreciation. Understanding real estate tax benefits can save you thousands and accelerate your financial growth. Today, I'm breaking down some key tax strategies that every real estate investor should know. Let's get started. Owning real estate comes with significant tax benefits that can drastically reduce your taxable income. From deductions to depreciation and even tax deferrals, real estate is one of the best investments for minimizing taxes. I'll walk you through some of the biggest tax advantages and how you can use them to build wealth. Let's start with one of the most well-known tax benefits, the mortgage interest deduction. As a real estate investor, the interest you pay on loans used to buy, build, or improve a rental property is tax deductible. This means that a significant portion of your mortgage payment can reduce your taxable income, potentially saving you thousands each year. Pro tip: keep detailed records of all mortgage payments for tax filing purposes. Another big tax break is the property tax deduction. You can deduct the property taxes you pay on your rental properties. This is another great way to reduce your taxable income, so make sure to keep track of all your property tax bills. Now let's talk about one of the most powerful tax advantages in real estate, depreciation. Depreciation allows you to deduct the cost of wear and tear on your property over time, even if your property is appreciating in value. For residential real estate, you can depreciate the building's value, not the land, over 27.5 years. This means that even though your property might be going up in market value, the IRS lets you deduct a portion of its cost each year as if it's losing value. Amazing, right? Pro tip: use a tax professional to maximize your depreciation deductions. Ready to sell a property but worried about capital gains taxes? The 1031 exchange is your best friend. This strategy allows you to defer capital gains taxes when you sell a property by reinvesting the proceeds into a like-kind property. You don't have to pay taxes on the sale as long as you follow the IRS guidelines for completing the exchange within 180 days. This lets you keep growing your portfolio without getting hit with huge tax bills every time you sell. Pro tip: work with a 1031 exchange specialist to ensure you follow the strict rules and timelines. Did you know you can deduct nearly all expenses related to managing and maintaining your rental properties? From repairs, insurance premiums, and property management fees to utilities and even marketing costs to find tenants, all these operating expenses are tax deductible. These deductions can seriously lower your taxable income, helping you keep more of your rental profits. Pro tip: track every expense, no matter how small, throughout the year. It adds up. If you're managing your properties from home, you might qualify for the home office deduction. As long as part of your home is used exclusively for real estate business, you can deduct a portion of your rent or mortgage, utilities, and home expenses. This is a great way to reduce your taxes while running your real estate business from home. One more thing to keep in mind is the power of passive income. Rental income is generally considered passive, meaning you're not subject to self-employment tax on it. However, if you qualify as a real estate professional, meaning you spend 750 hours or more per year in real estate activities, you can take even bigger deductions. This status allows you to deduct losses from real estate against your active income, giving you even more tax-saving power. Here's an example of how these tax benefits come together. Let's say you buy a rental property for $300,000. You can deduct the mortgage interest, property taxes, and operating expenses. On top of that, you depreciate the property, claiming about $10,000 a year in depreciation. After a few years, you sell it using a 1031 exchange, defer the capital gains, and buy a bigger property without paying taxes on the sale. By combining these strategies, you're not just building wealth, you're also keeping more of what you earn by minimizing taxes. As you can see, understanding real estate tax benefits is a game changer. From deductions to depreciation and deferring taxes through 1031 exchanges, these strategies can supercharge your wealth-building journey. Ready to dive deeper? Make sure you consult with a tax professional to maximize your savings. And don't forget to hit that subscribe button for more real estate tips and advice.